Welcome to the last part of our video, which is known as the message section titled KPMG Hedge Accounting Manual. I would like to be very straightforward as far as these big fours are concerned. Apparently speaking, they look like an institution with full of corporate governance, full of check and balances, maker checker principles, full of regulations, full of scrutiny. But the hard reality, we all are aware about it. Even today, there is a website whereby there is some information about one of the big fours, which I would be covering probably tomorrow on our social platforms. When it comes to hedge accounting, which is still one of the gray areas we have in the world, and by December 2023, when IFRS would be mandated worldwide, Basel III would be mandated worldwide, then the same hedge accounting would be a major mess. Reason being, even today, majority of the US banks make their annual report, which is also known as 10K in the US parlance, on US GAAP. But eventually they have to shift to IFRS, which is International Financial Reporting Standards. And one thing which is definitely sure as far as the International Financial Reporting Standards is concerned, which is transition, which practically means that there is a transition of hedge accounting from US GAAP to IFRS, which is complicated, let it be honest, which is complicated. But having said that, we really need to learn one thing very substantially. Number one, hedge accounting is completely dependent on the risk management policy of that corporate treasury, rather the board. Now, that corporate treasury could be of bank, it could be of financial institution, it could be of private equity, it could be of hedge fund, it could be alternative investment fund, it could be probably any REIT, real estate investment trust, or maybe whatever. It completely depends because that corporate treasury policy determine what forms of derivatives you can take and in which markets you are allowed to take that derivatives, and more importantly, the impact of immunization is covered on a gross basis and the net basis. Are you allowed to cover only the domestic markets, which is also known as the deliverable market? Are you allowed to cover only, or you're allowed to cover the global treasury centers like United States and many? And if you are allowed to cover a global treasury centers, then which all banks you are dealing with? Goldman Sachs, Citi, JP Morgan, Barclays, UBS, ANZ, Standard Chartered, Westpac, many. Because the limits which these banks are sanctioning to you vary from bank to bank. All banks I mentioned have a different interbank desk. So the level of premium which they offer to you is different. So the level of premium which Goldman Sachs might offer you, probably JP Morgan Chase might not be able to offer you. They might be offering you a little lesser, or they might be offering you a little higher. That depends upon the liquidity they are maintaining, which could be prop position, which could be market making positions. Second, the hedge accounting dependent on the type of derivative instruments you are taking. Now, either this is L1, where the observable variable is 100%, either it is L2, where at least 1% is non-observable, or where you have L3, which is known as mark to model, where majority of them is the unobservable. It depends upon the mark to market accounting, because in either case, whether this is a cash flow hedge or this is a fair value hedge, there is an element called reclassification adjustment, and reclassification adjustment is bound to happen. And the impact of reclassification adjustment is nothing but the mark to market. So mark to market would surely be hitting you in the books either ways, which would impact your basic EPS, which would impact your diluted EPS, reported EPS, or adjusted EPS. Henceforth, these hedging strategies should be EPS neutral. And third and very important thing is the hedged item. That is the most important thing. And the ISDA agreement. ISDA agreement means ISDA Master Service Agreements is dependent on both, which is the derivative strategies and basically the hedging derivative and hedging instrument. We also have CSA, credit support annex. We also have RDS. So the hedge accounting cannot be generalized, and ideally speaking should not be generalized. Because if you are generalizing the hedge accounting, then you are doing the biggest mistake of your life. And by the way, the big fours are doing it. And the live evidence is this. Like if you look at page number 11, there is a diagram which is presented about the face value, fair value hedge. Page number 11 of Hedge Accounting Guide. Now, is this diagram correct? I don't think so it is correct. But this is presented by KPMG. Guys, please understand that hedge accounting is very complicated. The more complicated the hedging instrument, the more complicated is the hedge accounting. So don't underestimate this. Let it be very honest. But having said that, it is very interesting exercise also. If we continue to do all this based on the Big Four manuals, we are not only confused but also misguided. Now, via this message, which I am about to close in another minute or so, I challenge KPMG that if you think you deserve to be a Big Four, if you think you deserve to be a Big Four, if you think that this guide derivative, which I have shown many times during the video, is correct, then I am right up here. I'm right up here. You can take my phone number, which is 9899242978. I repeat, you can take up my number 9899242978. But please do take a note that we have still left with few people who know the concept fundamentally, who knew the concept fundamentally. I would like to bring this message to the people, those who are chasing the Big Fours and reading their manuals on Google or maybe the printout the way I'm taking. You may please read it, but use your mind also, because not everything is correct in these manuals. but still. This is Rahul Magan from Treasury Consulting Group. You know my personal number, which is 9899242978. Offended people from KPMG, you knew my number, 9899242978. Have a great time ahead.